Welcome to TradingLounge and the ASX200. So we've had this strong move down, which obviously appears to be the third wave here. So I'm still looking at all of this as an A wave here, a B wave here, and a C wave here, with 1 and 2 and 3 and 4 and 5 for the C wave here. So let's go in and have a look at this space here for a moment. On the 4-hour chart here, we can see that we'll look at this as wave 1 here, ABC for wave 2, and a 1, 2, and 3, and 4, and 5 in here that I don't think's finished yet for wave 3, then wave 4, then wave 5. So we're looking down at the old lows here for support around the 6.4 here. There obviously will be a dance across the 6,500, which is a medium level. And it should sort of reflect something like this over here, same but different. But just expect that sort of dance to occur there. So this needs to finish here as wave 3, then little wave 4 here, then wave 5 here, then wave 4 here, then wave 5 here. So it can spend some time in this area here. So just be mindful of that. If you are short, then if I be very conservative and took this top from here, then this is the 38.2% retracement level, so we could put that there as 70, so 6,570. So we may as well go to 72, and we need to keep the stop above that. So at 77, you need, well, on a 4-hour chart, then keep the stop above that high here for the time being. On the hourly chart, just to get a bit more of a view of this here, it looks a little bit like this here. So I'm still waiting for the third wave to finish off, then the fourth, then the fifth here for this, then an ABC for the fourth here, and down for the fifth. I think the fourth wave will be quite simple because
unless it's done. Really? Just holding up some flags.
Wave 2 here was quite complex. So we'll just keep that in mind as it opens up through there. On the tick chart here, just to look at this a little bit closer here, I was looking at all of this as 1, 2, 3, 4, 5 down to here for 1 and 2, and then 1 and 2 here, 1, 2, 3, 4, 5 for the third, fifth of the third, a fourth here, and a fifth coming down into this space. Here, wave 4 may get a bit more complicated here. This is the first bounce off this side here. The other count here, which I just need to check a little bit as well, is to have, copy that, is have wave 1 here and here. I just need to go in on the 20 tick chart and check that. I want to have a look at the materials sector. So this is the materials sector here. We've been over this before. So we've got wave 1 and 2 here, 3, 4, and 5 here. The ASX200 moved way up here with the with the bank's help. In this case here, we were looking at this here as an A and a B and a C wave here. So we'll be looking for, this appears to me to have further downside. So we would get, if we just squash this up a little bit, this is what we've got here. So in a nutshell, really what we should be looking at is shorting the materials sector now with that length here over to here. So with the materials sector, we can look to come down to the medium level here, 11,500 here. The XMJ, this is the XMJ. Just have a look at the XMD here, the mid caps here. They've rallied higher, a little bit like the ASX200, but not that high. So in this count here, from the low here, we can look at this as an A wave, a B wave here, and then 1 and 2 and 3 and 4 and 5 here. So this as an A and a B and a C corrective rally here. So once again, this has also got further to come down here as well. Should make a new, at least come down to its old low here. So there seems to be a fair bit more to go within all of these sort of sectors. If I was looking at a bigger bearish picture here, which will go to the weekly chart. I mean, just first of all, let's go back to the daily chart. See, what I was thinking in a way is that with this medium level here, normally we get, some type of correction across this here as a classic trading levels pattern here, and then further upside here. So the arrival, the reaction, the first high above the level, then the A, the B, and the C wave here. So that's the normal pattern that happens at a level here. But we also need to be mindful that excuse me, I've got the flu coming on or something. This is, in a bullish market, this is the normal pattern, the most common pattern we would see. There's variations of this, but this one's playing out like this. But we also need to be mindful too that this just may not come back up and move up here. It may just, continue to the downside here. So we need to be mindful of a further downside move in this area here. On the weekly chart here, I've just sort of drawn that out a little bit. If I first of all come back to the GFC here, where we've got wave 3 here and wave 4 here, it's always been very difficult to count this whole move up here for a couple of reasons. Wave 4 here firstly overlaps wave 1 here, but I've labelled it wave 1 and wave 2 here, and then wave 3 and 4, and then I've been counting 5 waves to the upside in terms of 1 and 2, 1, 2, 3, 4, 5 to the third, an A and a B and a C, expanded flat for the fourth, also overlapping wave 1 here as well, and then counting 5 waves up here. So in a nutshell, I can count 5 waves up here, but there's problems with that. It doesn't have the right look and feel. Not that it needs to make a new high here above this one here. All the fifth wave needs to do is have 5 waves in it. So, but we've got that double top there. Double tops are never the end of a bull campaign. So, but that still doesn't really help us a lot at this scale, because we could certainly come down for a larger picture here. So in this instance here, we've got a whole series of possible tops in play here. Labelling it a small, I've got a much smaller degree here, but I mean a bigger degree than the other one, but an A and a B and a C wave coming into play, and then moving back up above the level and cruising back up from that point. So that's what we'll be looking for. We'll look for that 5 waves down here, and then once that 5 waves is completed, then we'll expect, further upside from that. But after those 5 waves down here have completed, if we get a breach below that 5 waves, then we need to look at the bigger picture here, and the bigger picture would be much more bearish in terms of wave 1 here and wave 2 here, and wave 3 coming down a lot further, and wave 4 and wave 5 coming down here a lot further than this. So so all I can say here is that going from, let's just go back to the daily chart here for a moment, be a little bit easier to draw out here. So currently we're looking at a 1, 2, 3, 4, and 5 here. So we'll count those 5 waves. We can see that we're somewhere at the lower end of the 3rd wave here. Okay, so there'll be a 4th and a 5th wave. But once that occurs here, once we've got that 1, 2, 3, 4, and 5 here, wherever that may come to here, we'll know when we've got the 5 waves there. So that low here becomes really significant, because if that's breached, and this may come back up and also test up here as well, and then fail down here as well. So it will take time to figure this out, but at the same time, these lows here will be the triggers and catalysts for getting out of a lot of your, or at least hedging your portfolios at that stage. If you've got shares in your super and so on, you'll need to do something at this point. So this will be a point that we'll be watching very carefully and taking note of at that point. So just start thinking about this. Don't get wrapped up in all of this emotionally, because we have to move with the evidence. We have to stay with the evidence, and we have to act on the evidence. And the evidence is that after these 5 waves here, if there's a low under this one here, then we need to take action in the bigger picture, because there'll be a much bigger move to the downside here. And certainly the environment set for that in that case. Alrighty, just a quick update. Cheers.